Thank you all so much for being here. We're so excited to get started. Here's Nan Morrison, President and CEO of CEE.
Thanks, Melissa and Steve, and thanks to all of you for joining us this evening. It's so special to have all of you with us, especially all of the students and educators. And an extra thanks to the Weston Talks, a student-sponsored club who's co-sponsoring this event with us this evening. This is actually our capstone event in celebrating October as Economic Education Month. We kicked off the month with a talk by Loretta Mester, president of the Cleveland Fed and CE board member. But before I get to the main event, a moment about CE. We are all here tonight because we love economics. We know that it is a tool and knowledge base that helps us to make sense of the world, whether it is why there's inflation, why the war in Ukraine affects us, understanding the environment, and tonight, sports. CE works to bring the resources that we all share in economic and personal finance knowledge to all of our nation's children. Most importantly, to those who do not have access to this information and knowledge and need it the most. We do everything necessary to get the job done, from creating the educational resources, providing teachers with professional development, identifying the communities who need it most, structuring programs to reach those kids and families, and advocating for state educational support throughout the country. Here are just a couple of recent events that illustrate our work. At our National Teachers Conference in Virginia just a month ago, we all heard firsthand about the post-pandemic difficulties that our teachers are facing: rampant burnout, discouraging distrust from communities, and deprofessionalization, the diminishment of the teacher's creativity, empathy, and skill in favor of hyper-specific program rigidity. We heard it from the teachers, and this is all supported by data from people such as LinkedIn's chief economists Karen Kimbrough and Michael Horn, leading K-12 educational expert who both keynoted for us at our conference. We actively engage you, our teachers, because it is the only way that we can target our educational resources and professional development to your actual needs and to support you where you are. Achieving cultural sensitivity, as well as rigorous pedagogical application, is an ongoing challenge. We also work to ensure that every student has access to high-quality financial education, and we are the recipients of a major grant to build a coalition that pushes for financial education in all 50 states. It's called FinEd 50, and it has its own dedicated website with toolkits, metrics, and touch points for these efforts. Please log on. There's an advocacy toolkit for you there. At a recent event in Pennsylvania, we put forth a bill requiring a high school class, and that bill has passed the state Senate. So we're on the roll. It takes a team, including state leaders, students, and other like-minded organizations, and it's great to have people like that on board. There was also at that event, Brandon Copeland. He was a linebacker for the Ravens, for those of you who are very focused on baseball or basketball right now. He has walked the talk on why financial and economic education is critical. All of our students need to understand how to survive and thrive on the fundamental level of managing credit, debt, money, to reap the benefits of that knowledge in freedom, security, and options. All of our efforts are designed to bring kids together in a welcoming, accessible, friendly environment that exposes them to the possibilities inherent in gaining this knowledge that we all share. And now to our wonderful guest, Steve Pagliuca. Steve is the co-chairman of Bain Capital, putting his knowledge of economics to work every day. I'd also like to mention something special that I read recently, which is that he and his wife, Judy, made the Pagliuca Harvard Life Lab possible. It's contributing to a big startup community in the area by seeding the campus with early stage scientific ventures. Together with two other labs there, the Life Lab fosters the cross-disciplinary approach to entrepreneurship that will enable deeper impact and outcomes. I just love that. But most relevant to this evening, he's co-owner of the Boston Celtics and has a stake in Atalanta Serie A football club in Bergamo, Italy. In fact, he calls them the Celtics of Europe. I'll let him tell you the story of why that team, as he recounted recently in the Globe. Steve, the floor is yours, and I encourage you all to send questions in through our Q&A session and our Q&A function for a Q&A session to follow with Steve.
It was great to be here, Nan. It's interesting, if I look back, my mother was a teacher, and I remember one of my toughest years when she got her degree. She actually went to school while I was growing up, and when she got her degree, her first practice teaching assignment was at my middle school, and I had the misfortune to be in the class that she was teaching with another teacher, Mr. Pataki, in history. So I really had to pay attention and do well in that class. That's a little, when you're 13 years old, it's a little tough to have your mother be the teacher of the class, but she was a great teacher, and so I'm very happy to be here addressing you. And in terms of economics, I think I actually started out trying to be an economist, and kind of went sideways in here. My grandfather came from Italy. My grandmother came from Italy, and they were immigrants. And he was a shoemaker. I have a picture of him in my office here, back there, of him making a shoe. And my father and grandfather said I really had to major in accounting in college. I didn't really like accounting, but they said that the next depression was coming, and this was in the 1970s. They had lived through the depression and wanted me to be depression proof. So they asked me to major in accounting at Duke University, which I did. So odd fact, I became an accounting major. When I went down there, I was always active in sports in high school, and I was going to play football there. I then was working out. I came down a couple of weeks early. I was a furniture mover to put myself through college. When that finished, I went down to work out. And while I was working out, I was playing against the basketball players, and the basketball coach asked me to go out for the basketball team. So I switched from football to basketball, played a couple of years of basketball at Duke, which was a great experience, and became an accounting major, kind of against my will, but studied a lot of economics as part of that. It was called Management Sciences Accounting degree at Duke. So to my chagrin, I learned that after I got the accounting degree, I thought I'd just have to pass a test to get the CPA, which is what they wanted me to do. And it turns out that you had to work 2 or 3 years as in a CPA firm, as well as pass the test. So I wasn't excited about that. So I went to the accounting firms who made me offers. I had 5 or 6 offers, and I was basically 22 years old. And I asked them, whoever sends me someplace out of the country, because I'd never really seen out of the country before, if I'm going to do accounting, I want to learn more about other cultures. Whoever would send me on the first job out of the country, I would take that job. And all of them said no. I think I had 8 offers. I think 7 said no, but one, KPMG, which was called Pete Morris Mitchell then, said yes. And then I got on a plane and found myself landing in Holland, in Amsterdam, and moving into The Hague. What was supposed to be, they said, a 3-month stint, but I enjoyed it so much and the office grew so much. I was actually there for 3 years and learned Dutch. Still speak a little Dutch today. That was a long time ago. And became a big soccer fan. As I was already a basketball fan, but became a soccer fan as well. And in that year, in 1978, when I was in Holland, the Dutch team went to the finals of the World Cup and lost, I think, 1-0 in the finals. But the whole country goes mad for soccer. They call it football there. So after that, I was actually going to teach myself, and I applied to several doctoral programs, economic programs, Berkeley, Columbia, Harvard, and I chose Harvard and decided to go there. And while I was at Harvard, I needed to be able to afford to pay for it, so I got a summer job with a little company at that point in time called Bain Company, and to help pay for my studies in the summer. And that was a transformative experience for me. They really, beyond even the business school, were on the cutting edge of business analytics and the experience curve and all sorts of techniques to help build and grow businesses from a consulting standpoint. And that summer went very well. And they came to me and said, we'd rather have you not go back and get your doctorate, just get an MBA, and you should join Bain & Company and work a few years. You can save up enough to get the doctorate, and we'll help you pay for the doctorate. And that was about 40 years ago, and I haven't gotten that doctorate yet. But as Nan said, I think I'm getting a practical doctorate of investing in businesses all over the world, from Tokyo to London, basically a global basis. We built Bain Capital from six or eight people in 1984. We have 1,200 now, and we our first fund was very small. It was a $37 million fund, and I was in charge of the technology part of it, investing in technology companies. And we've grown that from 6 people to about 1,200 people today, and a global business all over the world, doing venture capital, basically using the consulting skills from Bain and Company to build and grow great businesses. And it turns out that those business analytics skills really had a high application to instead of just consulting to businesses, we could purchase them for investors, and we have teachers funds and all sorts of funds that we manage to, for pension funds, and then grow those businesses, globalize them, help them with new products, and start businesses. The first investment that Bain Capital, one of the first investments Bain Capital ever made, believe it or not, was a few blocks from our office. A person named Tom Stenberg came in, and he had the idea to put office supplies, anything you wanted to start an office, in one large building, kind of a warehouse concept. And at that time, if you wanted to start a business, small business, you had to go to a stationery store, you had to go to a store to buy copiers, you had to go different places to do different things, furniture. Tom thought he could get a store the size of a football field and put everything you needed to start a business. And that was a kind of a revolutionary concept in those days, believe it or not. And we invested $2 million into help him to start that business. That became Staples and became a $10 billion market cap sales business over a period of 20 or 30 years. Now being displaced by new technology, the internet and Amazon, but still a big retailer out there. So that experience in accounting and the experience with Bain and Company Consulting, led me into the investment business and helping to build and grow Bain Capital writ large with Mitt Romney, who had hired me to do that, and Bill Bain put me over there. And I specialized in technology and healthcare. And the reason I did that was because I felt like those were growing areas, and those were areas that would have long-term impact, on people, and it would be fun to be involved in. And I've kind of specialized that in my whole career. I've been doing that for 35 or 40 years now, and segued those consulting skills into the investment business, and been able to involve with a lot of great management teams and a lot of great companies over time. As we built the Bain Capital global business, I had always been interested in sports, and I kind of got hit by the lucky stick in that Wick Grossbeck, who was a friend of mine, our kids went to school together, called me up and said there was an opportunity to partner with him to buy the Celtics. And that was about 20 years ago, 2002. And we had a bunch of meetings, and he knew I was heavily into basketball, and he had done crew at Princeton. And so I combined with the Grossbeck family to try and buy the Celtics, and we were successful, built a great group of individuals in the Boston area to invest. And at the time, sports teams basketball teams were probably 28 or 29 of the 30 teams were losing money. So it was a risky investment at the time. And the Celtics hadn't won a championship in a long time, I think 15, 16 years, they hadn't won a championship. The Garden wasn't full, and the business was kind of running at break even. So we put together a diverse set of investors because we felt it was going to be risky. And we did it more as a labor of love. We loved basketball. We wanted to bring back a championship. It wasn't really an investment to make money. It was an investment to bring back a championship. And we saw it as a community asset. And we had 3 goals at that time. The first goal was to win a championship. And that's hard to do. But we really, as you know, in the Boston area, nobody counts anything except for championships. And so we knew we had to do that. So we wanted to put together a plan to win a championship. The second thing we wanted to do was make it a better fan experience. When we bought the club, it was a family business. They hadn't had much technology. They didn't really have a database of their customers. They really kept the fans, for the most part, away from the players. And so we wanted to make it a much better fan experience. And we knew we could do that, irrespective of winning championship. The next goal was to have an impact in the community. And so they had done a lot of good things in the community, but they hadn't done it in a big way, and they hadn't done it very systematically, and they hadn't done it with a lot of money. So we set out to build something called the Boston Celtics Shamrock Foundation. And its target was to help the New England community, people who needed help with education, underprivileged groups, mainly focus on children and opportunities and anti-discrimination and social justice. And our investment group that bought the team, we have I think over the last 20 years invested more than 25 million into that charity, and we've just committed to another 25 million, 2.5 million a year, specifically on 6 social justice pillars, which we researched in the wake of the Floyd incident that shocked the nation and shocked us. And we said we really have to double down on social justice. And so we just came out with this about a year ago. It's up and running. It's been great. Our players all participate. Our group participates, the coaches, and it's really galvanized the whole Celtics organization. We have over 100 people in the Celtics organization that are part of these 6 committees that focus on healthcare equity, economic empowerment, getting people out, changing the criminal justice system to make it more fair, and a host of other activities on these pillars. So that's been really transformative for us in the organization. So of those 3 goals, it turns out we were able to get a championship and almost a second one. We came very close on a second one, but we had a championship in 2008 with the Kevin Garnett crew, and Danny Ainge. We brought in Danny Ainge, and he really turned around the culture and the team. And then we thought we'd have to have another kind of rebuild period. And it turns out that Danny did a great job, kind of on the fly, keeping us having good teams, and now with Brad Stevens and the team we have now are contending again. In terms of, we could discuss this more in terms of like the economics of sports teams. Back in 2020, values of NBA teams were basically in the kind of 150 to 250 or 300 million level, and they were selling on kind of a multiple of sales and what market they were in. They weren't making much money. I think 28 teams were losing money, so it was a risky proposition. And as time went on, as media fragmented, it turns out sports became very valuable properties to aggregate a lot of eyeballs. And that drove sports rights on a national and local basis way up, revenues way up. And then David Stern and Adam Silver were great commissioners, understanding all these economics, cut a partnership deal with the players so that as we grew, they would grow, and they would have more of the income from the revenues. And there was a 50-50 deal struck that was, I think, seminal, and that brought many of the teams into at least making some profit so they could sustain, and therefore values went way up as these television revenues tripled and doubled over that period. And then the players now are some of the highest paid players. I think the highest paid players in sports per capita, because they get 50% of the profits, and the owner groups get 50% of the profits, which has been a very good structure for us, and kind of helped turn the whole league around. And it's made the players happy, the owners happy, and the fans happy. The NBA in general, I think, is one of the best run leagues. David, who's passed away now, and Adam are really great business people as well as great ambassadors for the sport. And they were prescient in investing early in globalizing the NBA. So they set up offices in London and in China and overseas. And now the very significant revenues come from overseas, from broadcasting the games. 25% of the players now come from overseas back to the US. And the league has never been in better shape, and values have really come up commensurate with that. And so as you talk about what are the economics of sports teams in general and the NBA specifically, they're really 2 components. One is, are there enough revenues, there's enough growth to at least have a viable entity. And many times the soccer leagues that I'm involved with in Europe, those are often problematic because you can get relegated, and if you get relegated, your revenues go way down, your TV revenues go down, and then you lose money, and many of them gone bankrupt. The U.S. has had a better system in that there's not relegation. There's a lot more sharing of the teams, so you create a strong competitive environment, and there are a lot better structures so that the players get well paid, but the franchises don't go into debt, and they're not allowed to have a lot of debt. And so it's been a very stable and good structure that they put in place, and it's only getting better and bigger as media continues to fragment and these rights costs go up. And basketball and soccer/football are games that are global games. With today's technology, you can reach them and you can communicate with fans and have higher engagement. And that's driven a virtuous cycle where economically the value of teams have gone up. And then because the teams, I think, can do so much good for the community, and they are really interesting assets, there's a scarcity value that I have to say drives a lot of the value of the teams, because there's only 30 NBA teams, and there are many people that want to get involved in these teams more and more every year as they see how great the games are and how fun it is, and what impact you can make in the community. So values have been driven up because of the scarcity level. So that's the basic story. I kind of came off the turnip truck, backed into learning consulting. I didn't know anything about it. Really fell in love with it through Bain & Company and Bill Bain and the guys that had hired me. And then I was always interested in sports, and when that opportunity came along, I jumped at it, even though at the time it seemed very risky because, again, they weren't very good economic propositions. And that's why we developed a larger group to diversify kind of the risk for everyone. And it turns out that that risk paid off in a big way, both from a community standpoint and economic standpoint, and a fun and enjoyment standpoint. So it's been a kind of a labor of love as we thought it would be. And right now feeling really good because we're back, kind of contending, and more importantly, I think have a great group of players at the Celtics that we think they're really great citizens and community people, and it's one of the tightest teams we've had in 20 years. So it's just been, really fun to be around. It's kind of a joyous experience every time I go to the Garden and get to see the team play and the fans and everything else. So that is the basic story. Do you want to open up for questions, Nan?
Sure, that would be great. First of all, as somebody who is in graduate school myself in Cambridge during the Larry Bird era, and right then, thank you for having a championship team a pillar of what you wanted to achieve with your partners, because those were quite heady times. So you talked a little bit about the process. What was it like to go through that process here versus the soccer team or football team, as they call it over there, in Italy? Was it, be kind of interesting to know how the maybe government structures, laws, the politics of that, the family structures, how that was similar or different?
Well, that's a great question. Here the family owner wanted to sell the entire franchise, and so he had set what at the time was a record price. There's actually a newspaper behind me there from 2002, which didn't help us a lot because it said Celtics sold for a record price, and we had a hard time attracting investors, believe it or not, because no one wants to pay a record price as an investor. So the Globe didn't help us out there. So that was basically a straight sale. He had a specified price, and we were able to put together a group to hit that price. So it was pretty simple. Although what we didn't realize is that I'd done very large transactions at Bain Capital. Wick had been a venture capitalist, and we'd been with the media, and we would do $500 million deals or $200 million deals, and there might be one or two press people that commented on or showed up. When we drove over to the Celtics facility on the day that this was getting announced, and the media was not happy because this was maybe the only deal in the history of Earth that wasn't leaked out until we showed up. No one knew what was going to happen. They set up a press conference, and no one knew what was going to happen. And we walked into that facility in Waltham, and there had to be 200 or 300 press people there. The flash bulbs, it was surreal, going off. And I thought, oh my God, I never thought this would have this kind of interest compared to the other things we were doing. But you quickly felt how high profile and how much scrutiny you'd get in terms of owning a basketball team. And I remember driving down the road and hearing talk radio in the first few weeks saying, oh, Steve Pagliuca, he played basketball. I hear he's even calling the plays, and I never call the play. We have coaches. He's calling the plays, and I don't know if they're going to win if he's calling the plays. So you have to have a very thick skin, certainly, both in the USA and in Italy. If you're investing into a sports team, you have to take everything in stride, because probably 3/4 of the things you read about the owner groups or the players are not true. They're just total speculation, trades that we never considered that come out there. So you have to be water off duck's back attitude, which is similar to both geographies. So that was that, and then you have to be approved by the NBA, which was great. That was the process there. The process in Italy was different. There was a family in Italy that some of my partners had met through doing some work with Serie A, which is the big league in Italy. There's 20 teams in the big league, like the Premier League in Italy, and it's one of the top 5 soccer leagues. Maybe the second best, and I think getting towards the first best soccer league in terms of talent in Europe. The family said, we would love to do some things like the Celtics do. We want to globalize it. We're an Italian family. We'd love to have a partner that has global experience. And so I was introduced to the family, and I flew over to Milan. They're right outside of Milan. And as I said in the beginning, I'm from Italian descent. My grandfather and grandmother, lived in New York City, and they would come every weekend to my house and make pizza and pasta. And I never realized as a kid how well I ate. It was like a gourmet restaurant. And every weekend when I grew up, and when I got off the plane, I hadn't spent a lot of time in Italy. When I got off the plane in Italy, everyone looked like me, so I felt very much at home, and the food was the same that I was eating. So I said, I'm really interested in this, and we hit it off with the Percassi family, very similar to my family. And we talked about what we could do together and how we'd help them basically internationalize the franchise, how we operated the Celtics, how we could have synergy between the two of those. And Wick also invested in my partner. Many partners in Celtics invested in Atalanta. And we started out to maybe buy a small percentage of the team, and they then said, maybe we ought to buy even more. And so they sold us a little over half the team. And part of the deal was that they're staying running the team. I wouldn't have invested in a foreign country, any foreign country probably, without having local expertise. And they had done an amazing job over the last 12 years since they bought the team to turning it into a perennial contender, and doing that in a very professional way, and building a culture that's very similar to the Celtics culture. If you go to Bergamo, which is right outside of Milan, there are this is the symbol. This is the symbol of Atalanta. Atalanta is a Greek goddess, and that was very fleet of foot. And you see the symbol everywhere in every shop and every person, and wearing the shirts. It's probably even more fanatic than the Celtics, because it's the main thing in this entire area and town. And they're very prideful that they've had huge success in a smaller city than Rome or Milan proper, and they've competed with these guys. So the town, just like when Boston, is very invested into the franchise and the team members. And the Percassi family, again, I wouldn't have done it without them, because it is very tough to navigate the political waters in foreign countries. Northern Italy is a lot easier than Southern Italy, where my relatives were from. But still, you need local presence, and so they're well respected in the town. They have other businesses. They own Kiko. I don't know if you know Kiko. It's the lipstick company. They've owned and developed that. They own the Starbucks in Italy, and more importantly, Mr. Percassi, Antonio Percassi, and Luca Percassi both played professional soccer. and he was a member of the Atalanta team. He started out in business by having a relationship with Benetton, the sweater company, when he was a soccer player. And then he leveraged that into opening up. He actually opened up a Benetton in Boston, and then leveraged that into doing Kiko, and then ultimately bought a Division II team and drove it to Division I. And then his son also is the same. And so his son is the president and CEO of the operation, and doing a fantastic job for us now. And so that was very different than the Celtics. The Celtics was, we had to just start from scratch. And the Celtics, at the time we bought the Celtics, they spent $0 on analytics. They spent $0 on international scouting. And so we did a Bain type study on what we had to do to compete. And we ended up, increasing the fragile budget from I think 6 million on basketball operations to 20 million. So we lost even more money, but we felt we needed to do that to get a championship. And we brought in Danny Ainge, and we brought in technology, and we brought in analytics, and that paid off in a championship 5 years later. And then the revenues went up, and so we ended up, breaking even after making those investments. The Percassis, again, they were very well run, as it is from a basketball side, and where we can help them is the globalization of the brand and television rights and all the things that we've learned from the NBA. We actually have a bunch of them coming over here at Thanksgiving time to spend time with our managers and our players and our training staff. And we sent some of our analytics people over there to work with them. And so it's been very, cooperatively synergistic on both sides, because there's a lot of issues that are exactly the same in terms of how do you keep players healthy, what do you do for charity programs and fan programs. And so we're learning from each other.
That's great. It sounds like, as in many things, people and the organization and how that all works is really important, all of those relationships. But we have a couple of other questions that are related to how you decide to invest in a sports team, besides being passionate about the sport. And so somebody asks, how do you evaluate potential teams? Some of this is very opportunistic, of course, but he notes that is this like the stock market, where you might watch trends in a particular top stock or a particular team to be able to evaluate that. And sort of a related question, somebody mentions that the Green Bay Packers have fans and investors, and should more teams have in the NBA have paths for individuals to invest?
Well, that's a great question. The Celtics actually had fans as investors. They were a limited partnership when we bought them. They were one of the first structures, like that. The Knicks are actually a public company, so you could buy shares in the MSG company, and then the Packers are also public. And I think you'll see that coming as the values of the teams have gone up so much. We probably couldn't have pulled together the money we pulled together to buy the Celtics now because the valuations are in excess of $3 billion, and we bought the team for a record price then. It was 360 million, so it's up approximately 10 times since we bought it. So I think you're going to see more structures and even creative things like blockchain DAO. DAOs are decentralized autonomous organizations that have actually tried to invest in some teams. And you have other structures now where people put together funds, and you can invest in a fund, and that fund would invest in the team. So I think you're seeing kind of a sea change in the ability to invest, and you'll probably see some clubs in the future go public, given the size and scope of these organizations today.
Great. And more on looking at opportunities for investments. Do you see any big opportunities today across different sports, and in particular, do you think there's some good upside, asks one of our listeners, for women's sports teams and investing in more women's sports teams? And then another question is, and what about pickleball?
What about what?
Pickleball.
Oh.
But I think let's look at the general landscape of sports investing. And I think the question of, are there women's sports teams that people should be considering seriously as investors today, and does that differ at all in terms of their economics versus some of the other?
I would say that the big football, basketball, baseball, hockey, those are great investments for preserving value. The law of large numbers would say, it's a lot easier to go from 300 million to 3 billion than it is to go from 3 billion to 30 billion. So just by definition, just by the law of large numbers, I hope the Celtics will be worth 10 times in another 20 years. I'd probably take the under on that, but I do think that sports franchises are very solid investments. They're not going to have a lot of downside when the markets go down. So family offices and investors that are trying to preserve value, almost like it's a better gold. It has more upside than gold, in my opinion, because they're great businesses and the TV values are going up. But I don't know if you can see the growth that we've had the last 20 years, the next 20 years, just because of the law of large numbers. Different story for let's say women's sports and pickleball, for example. These are more embryonic. We're starting to see some signs of success in the WNBA and probably you're seeing the most success in women's soccer up in Seattle and Portland, places like that. They've developed great teams with great followings. And as television wants more content and it's easier to deliver content, the whole landscape has changed. We've just invested in a company called the Delta Tray that I'm on the board of that has developed basically a software infrastructure to stream any sport for a very cheap amount of money. So right now, if you wanted to do Netflix, let's say Netflix is starting, they had to spend probably $100 million, $200 million to build that system to stream individual programs to everybody on demand. We can sell a package for $5-7 million that does the same thing now, which will really change the economics, because you can stream a women's sport to the people who are interested in, and you don't have to put a $100 million investment in the software to do that. So that's going to change the economic picture, and you have to have less subscribers to then pay everybody and break even. And so I think you're going to see in the next 10 to 20 years a lot of these sports becoming more economic to be able to watch on TV, to be monetized, and be more content. And so you'll see the growth, and I think women's soccer is a prime one. You've already seen Apple sign a deal with MLS here, the American Soccer League, and so that deal is more television revenues for them, and Apple's streaming it. And I think the hope would be at the end of that contract, maybe they can go on to a bigger platform or get a better contract, because people will be watching the games. So when you're betting on a pickleball or you're betting on women's sports, you need to have deep pockets, because it's going to take a long time to get the revenues up for it to have a lot of value. But the upside is higher because you're buying these teams. I think pickleball teams are selling for in the millions, and women's soccer teams are selling for in the millions. And if you can replicate even a part of the success of the NBA or MLB, the teams will be worth hundreds of millions, if not more.
Great. So thank you. You talked at the beginning of your talk, you talked about sort of your passion for the Celtics, but also you had kind of three parts of your strategy that you outlined, and you've been executing on those. Now, as an owner for an ongoing team, obviously from the last question, it sounds like you're always looking for new opportunities, but what does an owner do, right? You came in, you set the strategy, executed, became successful. How do you spend your time as an owner of the team?
Well, it's really no different from how you spend your time on any business. Every day there's a different issue. We spend our time trying to get more sponsorships, so we can increase the revenue, so we can then pay the money necessary to bring the great players in. So increasing sponsorships, negotiating television deals. Every year the Celtics has had a great history of developing great people. So we lose coaches like Doc Rivers, and then we have to hire a new coach. And we have several coaches now that are head coaches of the NBA. Daryl Morey was with us as the general manager of Philadelphia. So there's personnel issues. We spend a lot of time in the community, trying to leverage the brand so we can help the community and attend events at hospitals. I actually help fund over 25 or 30 charities in partnership with them. And so that more than fills up an incredible amount of time, and it's something new and different every week. But it's the constant effort to improve. We bought the Maine Celtics. It used to be the Red Claws, And so now we have an operation up there where we try to develop players, and we have to hire coaches for that. So it's just like any other business. You have sales, marketing, finance, player development, community work.
Well, that's great. And that leads into a raft of other questions that I'm going to suspect it's the students have been asking about building their careers. So somebody was very excited that you were an accounting major, because I guess they have that same uncle or grandfather telling them to do, or aunt or mom telling them to do the same thing. But if you were interested in sports as a career, are there good things to study in college? Are there good kinds of jobs to have? Like, what would you tell the students who are interested in thinking about having a sports management career, about the kind of things that they might want to consider being good at, or having some facility?
Well, that's a great question, and it's become a huge industry now. So there's a lot more opportunity than there even was, certainly the 20 years ago. And there are different. It depends upon what your passion is. There are really different positions and different angles on how to get into it. But you have to be really passionate about it, because there are only 120 professional teams in the United States, and so we get incredible applications to work at the Celtics, or they work at the Patriots. But the avenues would be, first of all, I think, get a good understanding of business economics and management, because it's all about management. And then what do you want to do within that? You can study statistics. So, for example, we've hired a PhD from Duke in statistics to run our what we call our basketball intelligence agency, the BIA, and we have 6 or 8 people there. We need people to do marketing and sales. So if you study marketing and sales and how to maximize sports teams, logos, advertising, promotion, that's another entree in. If you want to do coaching, you can go to college and volunteer to be a manager of a team. So I have my nephew actually was a manager of the Duke team, and then he used that in Coach K recommendation to get a job with an NBA team. He works for the Grizzlies in scouting, and he's working his way up there. So I think the base of some kind of business understanding, and then figuring out how to network and apply that to sports, and the entree, and you can also work for companies like Fanatics or Nike or companies that are related to sports, and then segue that training into working for the NBA office, or working for an NBA team or a NFL team. So those would be, I think, the major avenues. Get involved with some either adjacency to sports, like a Nike or New Balance or Fanatics. Delta Tray, is selling streaming to sports teams. Get involved with companies like that, and then segue in directly to sports, or have traditional skills that you can then apply to marketing or all the business functions of the sports, or get into the coaching and the other aspects through probably college programs.
You touched lightly on this analytics moment, and I actually was chatting with a young man this weekend who was doing that for one of the college football teams. He was a football player in college. So maybe you can talk a little bit about that as a career opportunity. I'm big on people being numerate, but it also, the whole economics is also moving toward more mathematical models these days. You have to be a real data hound to do well as an economist even. So maybe you could just talk a little bit more about how the franchise is using that. Obviously, there's the famous Billy Ball deal with, many years ago, where this really sort of caught on and caught the public eye.
Well,
but
we actually
using it to run the business, make decisions.
we actually when we came in, they had none of that at the Celtics, and so we put together a team of people. And the first thing we did was, hire Daryl Morey from MIT, and we hired Mike Zarin, who's still with us today. And then we later hired the Duke PhD, Dave. And basically, analytics have become, a big part of sports. I was at the first MIT conference, sports analytics conference that Daryl Morey actually put together. He was our staff. He put it together. And the first conference was at MIT in a small classroom. And maybe I spoke to 80 people. And now today it fills up the whole convention center in Boston, the entire convention center. I think 20,000-30,000 people go through there, and they have 20 breakout rooms on everything from analytics to marketing to team development. So that's a burgeoning area. Sports analytics, and we're bringing that over to Italy. We actually have hired a whole staff in Italy. There's an article about Atalanta changing its style. A lot of it's because we brought in the sports analytic to figure out how you win better. So to prepare for that, you need to know mathematics. You need to know modeling. The second numerical thing would be for our ticketing and customer, and we have data analysis. For trying to track our customers. What do our customers want? How do you do dynamic pricing for seats? So there's a whole bunch of analytics in terms of how do you both best optimize revenue and customer experience. So any kind of background in math and data science, data analytics, is useful for sports teams, both on the business side and on now on the sports side.
Well, I'd like to know when the right moment is to buy the cheapest tickets to go to various games that I like to go to. So, so you also talked about the fact that there was a social aspect to what you do, that the Shamrock Foundation, giving back to the community. During COVID, we did a series of lessons, and one of them was on which, as the economy was falling apart in different sectors, where should the government actually be boosting, which industry should the government be giving a boost to? And it turns out that one of them is professional sports, sort of surprising, but because of the effect that a sports team has on the whole community, all of the people that go to the parking lot attendants, the small stores in the area, all the food vendors that are operating within and around the arenas. And I'm wondering, with the current economic environment being a little challenging, in particular with people's discretionary income because of inflation, if you think you're going to see ticket sales dropping, if that's going to have an impact on the community, and how maybe the foundation is thinking about managing that to make sure the community stays healthy in these really challenging times. Sorry, that's a hard question at the end of that talk.
Well, first of all, what's interesting is most of the arenas are filled up, and we have a waiting list for the tickets. Even with the recession, I think less than 1% of the people in the United States have seen an NBA game live. It's some crazy number like that. And so there's a lot of demand, from a lot of different people to see the game. So far, there hasn't been, we fill up the stadium and there hasn't been any issues. And we try to be as reasonable as we can in pricing. We try to keep, cost-effective seats, although, things definitely have gone up with inflation. So we haven't seen, an impact. We've been sold out the last 10 years, and we're sold out now, and we have a waiting list of thousands of people that just want to buy a ticket. So it's a nice problem to have. In terms of the economic impact, I agree with you 100%. As you may know, I was involved in trying to bring the Olympics to Boston, and the Olympics would have brought something on the order of $3 billion of economic impact here. And there was a campaign against it, which I thought was a lot of disinformation, because what the campaign against it didn't say was, yeah, the people lose money in the Olympics overseas, but in the overseas it's run by governments, and the governments are building homes, and they're doing a lot more than running the Olympics. They use money to do other things. When you factor that out and you look at the Olympics in the U.S., even back from when Peter Ueberroth put the Olympics on in LA in 82 or 84, that 84 Olympics had a huge profit, and they have a foundation today based on the profits of that. They're still giving out money. Mitt Romney ran the Olympics in Utah. He created a foundation off the extra money. And then when we had it here, potentially had it here in Boston, the revenues, the total revenues of the Los Angeles Olympics was something like 500 million. Our revenues were projected to be, excessive 3 billion. And just to put on 40 sports for $3 billion, I didn't see any possible way we could lose money. But there was a disinformation, campaign on that. Secondly, I think sports clubs, you can see it right now. Look at the area around the Garden. Everything's been redeveloped around the Garden. Huge economic activity. The good news also is we still have a 3.6 unemployment rate in the USA even now today, with a potential recession coming. I'm hoping that high rate of employment will blunt the size of a recession. I haven't seen many recessions, where where you have that high of an employment, and you're gonna have to drop down a lot, to start causing, such a big recession. So my bet is on a lesser recession, a garden variety recession that will hopefully end pretty quickly. And the United States is bringing down inflation by bringing interest rates up, and our currency is strong. And we're probably the most self-sufficient country in the world. So the deglobalization that's happening right now is actually impacting a lot of the lesser developed countries and the poorer countries, which is terrible for their citizens. But countries like the United States, who have safe borders and good trading partners, and the highest GDP in the world, they should go through this a lot easier than the other countries that are decoupling and losing trade and losing jobs because of that. So on a relative basis, we're in good shape. My fundamental pitch on jobs is that the number one thing that creates jobs is great education, which you all are involved in. And we need to invest, more in education. We need to put more technology into education. We need to, pay teachers more, and because that's the future. And unfortunately, that's not talked enough about the politicians. They talk about other programs, other ways to help, but everything I've studied economically is the number one way that people advance is by having a fantastic education system for the population. And I think we've got to, fundamentally change that here. We've got to make also more opportunities to become technicians and computer scientists and very high tech, paying jobs, repairs for computers, things like that, like the Ben Franklin does here in the city. We're not as good as Germany and other places in having careers that are very high paying careers that don't involve just a liberal arts education, where sometimes there's not enough jobs for all the people trying to do the same thing, being a lawyer or an accountant or whatever. And there are great jobs in other sectors that I think Germany's done a really great job of creating, wealth for all the people and distributing the wealth more because of that. So that's a long-winded answer to the question, but I do think sports teams, we're promoting that at the Celtics. I do think sports teams clearly add value to the communities they're in right now, given the values, given the employment. And then on our part, we are trying to do everything we can to support educational institutions, support people to get education, and work with companies to do that.
Well, that's all about creating economic opportunity, which you talked about at the beginning of the talk, and we're hoping to prepare all of our students, no matter what path they choose, to make good use of their resources. And thanks for the positive outlook on the economy. It's like having Mark Zandi here with us. He's always very, very pro economy. We have some other economists, not so much, but all the data that you cite is absolutely on point. So I'm going to end on a lighter note, and an easier question maybe, which is, what have been one or two of your favorite moments as an owner of the Celtics? And I suspect that has nothing to do with economics and business.
No. My favorite, I have many of them, but some of my favorite in that championship year. What I didn't realize as a fan, and I don't think what most fans realize is it's a grind in the NBA. The most fans come into the game and they want a great show every night, but you don't realize that the guys have played 3 games in 4 days and they're coming in and they're dead tired. They get in 2 a.m, and you have to sacrifice your body. And so when you sit in the stands, you want a great game, but these guys put in a lot of sacrifice and a lot of time, and it's a very competitive league. So to get to the championship is incredible. And the toughest position in all this is the coach of the team, because he's got the best coaches lose 20 or 30 games, and I hate losing any game. And so they've got to be on the front line, of losing a game. And so one of the best moments was when we won the championship, and they poured the purple Gatorade or red Gatorade over Doc Rivers, and so his shirt was all red. I think I have a picture back there somewhere. So Doc grabbed me and hugged me, and I felt very happy for Doc, because those coaches on the front line, they take the pain every time that you lose. It's their fault. And they take the pain in the media, and they work really hard, and they're working 24/7. And to see, the joy of the team and the coach and be part of that, that's kind of priceless.
Well, that's great. Steve, I just want to thank you so much for spending time with us. Clearly, you have your fingers in lots of pots, so we're glad to have a little slice of that. We really appreciate all of your comments, your great advice to the students. The story about what it's really like to own and build a team is really inspiring and informative as well. And of course, I have to say thank you so much for your interest in education and the things that the Celtics and their foundation are doing to invest in the community. It's important to all of us, and we just think that's
Well, thank you. And look, I think America still is the best country, for upward mobility. We've got to do better at that. We've got to get the education to do that. But I'm certainly an example of, I would have never thought, if you're all sitting there, I mean, I would have never thought in the world I could own a sports team. Even if they were 100 times less expensive when we bought it, I would never even, because I came from, my grandfather was a shoemaker, and my father was a salesman, my mother was a teacher, and we had a very nice life, but I don't think that was ever on the radar screen for me. I was trying to become an accountant just so I could pay the bills and not have a job during the Depression. So I've been very lucky to some extent that there's no grand strategy to do this, but just being passionate about what you do and getting a good education and then applying that, good things happen. And I think that can happen to all of you, but you've got to put the work in, and you've got to study, and you've got to be curious, and then you've got to try to get as much education and experience as you can. And then these things can happen to anybody in America. You see it all the time with Bill Gates at Microsoft, and I see these stories all the time. We have stories at Bain Capital, people coming from other countries getting scholarships to schools here that have next to nothing, and then they become the CEO of a great company. So, but again, I go back to the fact that why I do this is I think education is absolutely key. Absolutely key. It's the number one key.
Thank you. I couldn't improve on your final comments at all, so I won't, except to say thank you again from all of us. And we look forward to seeing many of you online at upcoming women's breakfasts and in our webinars and in our national competitions. Don't forget Personal Finance Challenge and Econ Challenge and Invest in Girls this spring. So thanks to all, and have a great rest of the evening.
Thank you. Bye-bye.